Here for a Power Lunch exclusive is Ian Siegel, CEO and co-founder of ZipRecruiter. Mr. Siegel, welcome, and we thank you for coming on this, which is not the easiest of days. It's easy to come on when the days are fun and there are kittens and cupcakes everywhere. That's not the case today. I want to look at your forecast for this quarter and going forward, which you lowered markedly, which may indeed explain in large measure why the stock is down as much as it is today. As you lower your forecast for this quarter and the future, what are you truly saying about the state of the job market and the state of the economy?
Well, it's very clear to us, and we definitely get an early indication, probably before the rest of the economy does, as to what's going on in the labor market. And what we see is a broad-based, macroeconomic-driven slowdown in hiring. And this is corroborated by other companies at our scale in our space that are sending the same message.
How do you go ahead, finish your thought. I'm sorry. Go ahead, please.
Yeah, I was just going to say it's particularly acute amongst SMBs, but enterprises are also slowing down their hiring as well.
Small and medium businesses, SMB. So how do you square that with the jobs report from January? Was January an aberration, an outlier, a black swan? What?
Well, I think both things can be true, as January is looking at people who were starting their jobs and the number of jobs that were live in that month. And I think the reality is right now that there is a very large delta, and it is growing, between open jobs that are posted and open jobs that employers are willing to pay to recruit for. We're very much seeing a posture amongst the employers in America of all sizes and across all job categories of what I would describe as wait and see. I think that with the tip of the cap to the Fed, that the work they have done raising interest rates is having exactly the desired effect that they were looking for. And so I just think there's a much lower level of certainty amongst employers who are still experiencing robust sales within their businesses, but they're just not sure that in this climate, this is the right time to add more staff.
You know, the bulls would argue, Ian, that this is fine, maybe even healthy, and that maybe we can sustain a much more modest level of job growth. I don't know if you guys have been through, different cycles in terms of the business, but when you see hiring slow like it is slowing right now, what usually happens next?
Well, what you would expect to see if it truly is macroeconomic driven is that as there are less jobs posted and also a lower appetite amongst employers to close when they do find a candidate they like, that you would see the ranks of job seekers swell. And that is exactly what we're seeing. So there has been a sizable spike in job seeker activity and the engagement levels we're seeing from job seekers in January. That exactly fits the pattern of a macroeconomic driven downturn. And I think the golden age for job seekers is coming to an end. So for the last 3 years, it has been an unprecedented time for job seekers to make a number of demands on employers. But we're definitely seeing a rebalancing of the labor market where the leverage is becoming equalized. I won't say it's tipped all the way in favor of employers yet, but it is moving in their direction.
I think the soundbite of the day is the one you just said there. The golden age for job seekers is coming to an end. Let me make two quick questions. The first one, very quick. Let me make sure I understood you. You're saying you're seeing lots of jobs posted, but you are seeing less willingness among employers to pay to recruit. Did I understand correctly?
Yeah, that's correct. So there seems to be a gap. And again, this is something that's corroborated by not just ZipRecruiter, but by other sites in our space that are noting the same gap between the number of open jobs that are currently posted that seem to be available versus those that employers are actively recruiting for and putting their dollars behind to try and attract candidates. So we're seeing that shortfall. I will say this, though, ZipRecruiter is a 90% gross margin business. Even though we were forced to take our top line revenue guidance down, we actually raised our EBITDA guidance from 20 to 24%. And I think we're going to weather this period just fine. So this is one of those times where it's very cyclical, the labor market, and it's moving, unfortunately, downwards. But we'll see what happens over the rest of the year and see if we don't get some sort of an uptick later on.
Wish we could talk longer, but we've run out of time here. Hope to have you back soon. Ian Siegel, thank you very much. We appreciate it.